Hi guys, welcome to SavvyMoneyShow, me host Sean. Now, you may remember a while back I said buy PayPal at 40, it's a good takeover target, and when it hit 60, I said 60 is fair value and I sold out my initial investment and kept house shares. I was umming and ahhing when it was around the 44 mark. I said if it comes down slightly more, I'm going to buy back in. I didn't, I missed the run, so I currently just have my house shares in this. So we're going to be talking about the Stripe takeover target. Thank you for giving up your precious time to watch this. I apologise for any background noise, I am outside. If you can, don't forget to hit the like button or dislike if you hate this video, and don't forget to comment in the box below, tell me what you like, dislike about this, and don't forget to subscribe if you haven't already. Don't forget to check out the free links down below. You can pick up a free share worth up to $200. Now let's get into it. Well, Stripe have tabled an offer of $60, and if I was PayPal board, I'd be telling them to jog on, it's not April 1st yet. I said $60 would be fair value, but that's for investors. You'd want a premium. I think Stripe are just testing the waters, and I know what they're thinking. They're thinking we could buy PayPal and all their subsidiaries without risking Stripe's business, because they're a free cash flow machine, that we could use PayPal's free cash flow to pay off the acquisition. It's like a Glacier menu acquisition. However, I think they want it for Braintree. There are a couple of things they could do with it. They could use it to expand their business. They could bring on more customers, cut out a competition. The PayPal checkout button is valuable, although a lot of people do not see it as that way. I think the balls do need to be gotten rid of to get full value from this company, and I think a company like Stripe can do that, but I'm not convinced Stripe will be the only ones coming in. You have Apple Pay, you have Amazon, you will even have some venture capitalists who will be looking to split up the company and sell them on, and I'm not convinced that that's not what Stripe's looking at either. Yeah, you know, they may even be looking at the funder business, selling on some of the low performing, low hanging fruit to some of the other companies. I mean, Google and Amazon would love to have the data of all these customers and what they're spending their money on. But I would like to know your thoughts, what you guys think. Do you think it will go through? I do not think so. This is traditional low balling. If I said what I would do if I was PayPal, and I'll tell you what I would do if I was Stripe. I would have been buying up PayPal shares when it got to 5%. I would have registered I've got 5%. When it's got to 10%, I would have tabled a bid like this, and just because it would have been worth it to table a bid like this, just to see where they lie. and then I can carry on buying up shares on a cheap, or I could wait for them to come back down to 40 once it gets declined. Yeah, at the end of the day, you can always sell 5% of your shares when they're 50% up, and then start forcing the stock price back down and buy back in. It depends whether Stripe want to play games like that or not. I don't think they will, but I think they'll just be more concerned with accumulating the shares at a discount. I do think PayPal will be a good fit for them, but I don't think they will want all of the business. I think they will sell off some of it if they get it. I do not think they'll get it at 60. I think if it gets pushed back, which it should be, and I'm surprised PayPal didn't come out straight away and say that, the fact that they're mulling it over is concerning to me. It's I think it should be a $70 to $100 takeover target, because they should be paying a premium, a bigger premium, I mean. Now, PayPal have been buying back an awful lot of shares. If I was Stripe, as I said, I would consider whether to keep it as a free cash flow machine. I would consider selling off one or two parts that don't fit with my metric, or whether to expand into those parts. But the low margin ones I would sell off. And then what I'm left with, I may consider floating more shares, the ones that have been bought back, and getting the cost of the acquisition off as soon as possible. But I would like to know what you guys think. Because I'm always interested. I'm more interested to hear those who disagree with me than those who agree with me, in case I missed something. I mean, you only have to look at a company, even after the run, the market cap is still underneath the enterprise value. Now, when it comes to takeover targets, people look at the enterprise value when they're tabling a bid. That's why they've come up with $60 a share. And you can see for a £49 billion company, there's throwing off $5.5 billion. It's not going to take long for them to pay it back. It will probably take them 4 years, less if they start selling parts. They won't have all the admin costs that PayPal have at the moment, because it will cost less if they're bringing it in with Stripe, because Stripe will already have a lot of those costs incorporated in their own company. Anyway, I'll see you in the next video. Stay safe, stay savvy, stay investing. Thank you to everyone who's donated via the Buy Me a Coffee app. The link is in the description as well.